morning, Hema, and good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we're going to get straight into it this morning. I'm sure it's a very busy morning for everyone. And of course, we're talking about a local market update. But the big news last week, of course, was oil. And I hope everyone can see the screen. And it's been quite a testing time for many investors, both locally and internationally. In terms of a local market update, the stock markets did find some support over the past week, with the Trinidad and Tobago composite up just around 0.7%, or Trinidad and Tobago index, however, did decline just around 0.8%. So not too much good news for local companies in particular. And the cross-listed index did advance about 3.8%. Now, the good news is that local COVID-19 cases, despite the relatively limited testing, continue to stand at just around 116 cases as of last night, and that the number of deaths has stayed constant at just 8. The stay at home as a precautionary measure over the weekend was announced to be extending until May the 15th, and that's to give some room for surveillance testing to increase significantly, with up to 50 tests per day over the next 2-week period, and that is supposed to be beginning today, in fact. In terms of stock market news, the financials of some companies reporting would have been delayed, including One Caribbean Media, National Flour Mills, and the MPC Caribbean Energy Fund. And with the price collapse that would have taken place over the past week or so, Heritage Petroleum would have announced that it is halting exports of crude oil, not production, but exports, and is going to build an inventory for it, which it has about 2.5 months of storage for. And hopefully there will be more favorable pricing over the next couple of months for oil prices. Internationally, global COVID cases have crossed just around 3 million now, and deaths have crossed that 200,000 mark. One of the big hopes last week was the success or positive news, hopefully, for a potential vaccine. That ultimately proved unsuccessful, and this vaccine was being developed by Gilead Sciences, and that the vaccine's name was Remdesivir. I think that's the correct name. But it wasn't as successful as hoped. In fact, it was called a flop, but it didn't seem to deter investors too much, with the S&P 500 just down around 1.3%. In the US, President Trump would have signed into effect an additional stimulus of $484 billion US, and that is to assist further small businesses as well as hospitals in terms of carrying some of their costs and financial commitments during this particularly trying time. Some silver lining: certain states and Germany would have moved for partial reopening as a testing the water case for more economic activity, despite COVID being prevalent and despite no vaccine or cure being developed as yet. But the big news, however, last week was that oil price collapse. And if we take a look quickly at this particular chart, we can see, well, it's been quite a painful year for oil prices. And we have the Brent prices in that yellow line, and WTI prices in that orange line. And as we can see, despite the price war in Saudi Arabia, between Saudi Arabia and Russia in terms of oil production, and despite that truce, oil prices actually turned negative, closing at around $37, minus $37 last week, Monday. So quite a historical moment there, and not a very happy moment for many oil producers. It did recover later on in the week to about $16.94 per barrel, and Brent has also adjusted downward to around $21 per barrel, and they are trading at pretty much close to those levels early this morning. But it does spell pain for a lot of oil producers, and is certainly a significant indicator of reduced economic activity at a global level. Speaking of pain for oil producers, we can see that major oil producers would have had their economic forecast slashed by the IMF recently in April. And as we can see, for example, the US, which is the largest oil producer in the world, their growth projections would have been cut from 2% for 2020 to negative 5.9%. Russia would have followed suit from 1.9 to 5.5%. Saudi Arabia would have also followed suit, moving to negative 2.3 in that red, and Brazil switched from a positive 2.2% growth forecast to 5.3%. China still in positive territory according to the IMF, but markedly lower than the 6% forecast pre-COVID. Now, it doesn't get too much better for Caribbean economies who are experiencing the double whammy of, in the case of Trinidad and Tobago, reduced oil production or energy production. But more importantly, reduced travel means reduced tourism inflows as well as remittances, and that is going to spell some certainly challenging times for Caribbean economies. As we can see, Trinidad and Tobago by the IMF, their growth forecast was downgraded, or updated rather, to negative 4.5% for 2020. And as we look across the spectrum, it doesn't get any better. Jamaica has gone to a forecast negative 5.6% growth forecast, and they would have filed to raise up to $1 billion in international markets recently. But the tourism aspect is going to certainly weigh on economies such as Jamaica, Barbados, Bahamas, and also St. Lucia. They are negative 8.5% growth forecast. So what does that mean for investors? Well, it means that you're going to have to be a lot more selective in terms of your equity portfolio as a start. And it means looking at the regional exposure of your different holdings to the Caribbean economies. And for example, if we take a look, Massy, in terms of their profit before taxes generated, would have about 55% exposure, or 55% of their PBT would be generated by the Trinidad and Tobago economy, 8% from Jamaica, just around 30% from Barbados and the Eastern Caribbean, and 8% from other sources. So certainly very significant exposure to Trinidad and Tobago, but also somewhat worryingly Jamaica as well as Barbados and the Eastern Caribbean. Republic Financial Holdings, in terms of their profit before tax amounts or contributions, just around 66% from the Trinidad and Tobago region, 7% from Barbados, 5% from the Eastern Caribbean, and just a small balance from the other. So the key takeaway for investors is with growth forecasts being revised, and that's going to have a real effect on your investment, the investments in your portfolio. It will pay significantly to be a little bit more vigilant and actively monitor your portfolio. Speak to a financial advisor or trusted investment professional to get some more insight on these issues. That's it for this week's Bourse Report. For more information, give us a call at Bourse at 226-8773. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com. Back to you, Hema. That's it for this week's edition. This has been the Bourse Report.